OMC Wednesday. Jerome Powell getting ready here to take the mic. Are we going to see a surprise cut? Very few think so. Very few think so. What is Powell going to do today on the back of U.S. preliminary GDP 3%? Is that a sign of incoming recession? We got a lot to talk about today, everyone. We're going to talk about a lot of things. I want to build off what we've been talking about specifically in yesterday's session. Yesterday we were talking about, listen, historically or in the past, when the TGA has refilled their treasury, guys, let's start over here. What's going on, everyone? Hope you're well on this Wednesday. Got a lot prepared for today's session. I hope it's going to be another banger. Yesterday's session, beautiful. Love to see it. Love all of you. I love that. Thank you over there. Just time before going live. So CTM keeps getting better and better. It's because of all of you, no doubt. Yesterday we were talking about expectations right now as seasonalities point to throughout the rest of the summer, first few weeks of September, not the best all year round. We were then talking about how, because of the Treasury just releasing their quarterly report and their refinancing targets, which are substantially high, they need to raise a total of, we gave the headline yesterday, $1.6 trillion, 500 billion of that just to refill the Treasury general account. That's happened twice before under Yellen, that they had to go ahead and refill the account. We got a graph over here. I work well off of charts. Let's go ahead and just bring it up on the board. And you can see in this area over here, most recently in 2023, they had to do the same. Prior to that report, when we were live, I said, you know what? Right now, Treasury general account is around $300 billion. It looks like 850 billion is a comfortable level. That means they probably are going to need to go ahead and just refill roughly $500 billion. Sure enough, that's exactly what they said they're going to go ahead and aim to do. A lot of those new issuances coming in August. August is a really heavy calendar. That's a drain on liquidity. That's not conducive of a, so is the rising dollar. So we got into what is an unfavorable period of the year as far as seasonalities. We got two changes in the macro, two changes in the situation. We're seeing dollar right now in the midst of a breakout. As we all hear, we try to stay ahead as best we can. There's nothing easy about it, but we also know we happen to be in what is the most favorable period of the year for the US dollar. That's one thing. That's just seasonalities. At the same time, though, the technicals are pointing to this breakout that's underway as well. So here we are, and that's not conducive for global liquidity. That puts a strain on it, right? Now, is there a lag between the dollar selling off 10% here and global liquidity? Probably and maybe. And do I think that because we're noticing these changing aspects right now, that boom, top correction? And what happens to Bitcoin is a question that I want to get into with all of you. That was, what happens to Bitcoin and what are our expectations for Bitcoin if we actually move into, I'll just call it consolidation, correction, sideways chop here on the equities. It could become something more, absolutely. And we also, again, we each and every day, I think that we really hit on very important pieces of the overall puzzle. We talked about how in April, we just saw a massive correction. April saw a 30% correction on the NASDAQ. And then we've looked at in the past, going back, since the last 100 years, how often there's been a correction over 20%. And then what's the soonest you would see another 20% correction? We tried our best to zero in on that. And the best that from afar, I could 11, 12 months is the soonest that's ever happened before. Could this time be different? Of course, it could always be different. Is this time different? That's another question. Probability suggests we just saw the dip. We just saw a massive correction, and that why we could see a normal correction. What's a normal correction? Just call it 9%, right? The last time that the Treasury was refilling the general account over here, you did see an 11% correction on the NASDAQ. I can't wait to the next time we have even a 10% correction on the NASDAQ, only because I want to see how Bitcoin reacts. The last time we had a 30% correction on the NASDAQ, Bitcoin corrected 30%. That was wild. That was a game changer. First time we ever had a 1-to-1 ratio. So I want to see next time the NASDAQ correct. Does it continue to hold that 1-to-1 ratio? Bullish. Does it go back to its old thing of a deeper correction than NASDAQ? Or do we begin to one day have shallower corrections? Over here in this period, the other time that the TGA was refilled to roughly around the same amount that we're looking at now, I say roughly. Look, we were coming off of lower levels, sub 200,000. We're starting here at 300,000. So, what's a couple hundred billion? So there's a little bit of a less amount that needs to be refilled. Nevertheless, this is a drag on liquidity. It's a headwind for liquidity. And you saw that in this particular period, I think it had a lot more to do with the TGA being refilled in so much as that this is when monetary base total began contracting. That's the top of each and every cycle. We also saw that the tapering of quantitative easing begun, and that's tightening. This is when the tightening cycle began. This is when the tightening cycle began. A lot of people right now are looking for the top. 4-year cycle behavior suggests that the top and the window for the top is really coming into play as we get into early fall. And, and I'm just reminding you all that, like right now we're in the process of, as far as the Fed cycle, of moving from tightening, and we haven't even gotten towards easing yet. They're not just beginning to tighten. Over here is when they just began to tighten, just to throw it out there. And of course, this was a much steeper correction. Again, they were tapering quantitative easing. Monetary base total was contracting, and we were getting ready for a telegraphed rate hike. At least I was telegraphing that in 2022 was going to be a rate shock. It wound up being a shock. It wound up being the quickest tightening cycle in history. And yes, most people told you why afterwards, but very few saw it coming ahead of time. That just happens to be the way it is. So that's just setting the backdrop about what is taking place right now. And I'm going to find a way to get into all of this because we got a lot to talk about today. So let's talk about expectations. I want to get into the main heart of today's session ahead of Powell. I want to be talking about what we're talking about, why this isn't the 4-year cycle. I want to be taking a look at what's currently taking place and then throw you out a teaser about actually what's happened. And it has nothing to do, well, fiscal dominance, not so much. I mean, yes, that's a large piece of the transformation taking place, but I want to get into some things you've probably seen before. Like, have you ever seen Cross Capital's global liquidity cycle? Right? We're going to take a look at that, and I'm going to throw out there potentially what I think is causing the difference over here. It's going to make a lot of sense, and then I'll spend a lot of time researching it, and then I'll go ahead and I'll iron out those details with you. And then this also makes sense because this kind of I've heard Raoul Powell talk about, and it's why his expectations, he talks about like the global refinancing and how it drives the cycle, and every 4 years how that governments around the world need to refinance their debt. And obviously he was like, he's a year off, right? He was expecting all this to take place a year ago. I'll talk about what the difference is, what's happening, and then we had the expectations up over here as well. So let's start off with this. Like, what do I think happens if we see seasonalities play out? If we see, and by the way, like, so here's where we are. And if you come towards, I guess, the middle of August, seasonality suggests, like, I'm trying to be very careful here because I'm not following seasonalities. I'm using them as a guide to set expectations. And you could say that, well, over here, as you entered into the two most favorable week period of seasonalities, seemed to play out on time, right? And then since it's still, we're still, it's something that you should be aware of. Let's put, and everyone in the game is. And by the middle of August, seasonalities do suggest that we could be higher than where we are today. And then the last 2 weeks of August, not so much. It's kind of like the last 2 weeks of December. It's a low liquidity, really bad time of the year to be in the markets type situation. Not much different with the last 2 weeks of August into the first week of September. Most people, many people that are like, many people are away. They're on vacation. It's time when they have time with their families, and you could see that. Is that the reason why seasonalities the last 2 weeks of August go off? Then you have obviously the first 3 weeks of September, and seasonalities on average, the blue line would suggest that by the towards the end of September, by the middle to the last third week of September, that we could be lower than we are today. And that would just be a lot more of the same. That would be normal. And if we are lower than we are today, that's what I'm trying to get at. Oh, you can't see. Sorry about that. Ace, you're our lifesaver. Appreciate you, buddy. Really, always a lifesaver. What I was pointing out is from where we are today, if we're higher by August, that's just, and here's the blue line. You could just look at the medium. I'm looking over here at the deviation that we're currently riding. But if you look at the blue line, you say by the middle of August, if we're higher, that's just on par. Last 2 weeks of August, for sure, under pressure. But I'm moving for here. I'm coming down towards the middle, towards the third week of September, and seasonalities do suggest that it would be right on time for us to be lower than we are today. There would be nothing wrong with that. Does that have to happen? I want to look at the 1998 deviation where we are today and then come back into September. And here you have, the third week of September, and it's about the same. It did trade below, it traded higher, but it's just sideways chop. It's about the same. That's what happened back in 1998. I'm beginning to see today some analysts out there talking about and why right now is reminding them of 1999. And we're not there yet, in my opinion. We're not into 1999. That's likely coming next year. I believe strongly that the correlation between what took place the 2 years before 1998 is the deviation you're looking here in blue and where we are today and what's taking place right now. There's a lot of similarities, right? And among them, two of the most important is prior years, both of them had back-to-back 20% gains. That is not normal. S&P 500, that's not normal. It's happened 3 other times in the past 100 years. It's very abnormal. And then you could see in the current year, they're both just coming off a 20% or greater drawdown. And then they're both the utmost deviation. It's a lot of similarities. It doesn't mean that the next year, this year and next year are going to be mega bazooka bull runs, but there's a lot to suggest that they could be. And that's what I've been hinting at is, and including the Telegraph, like we are going to try to grow our way out of this. And that's exactly what they're trying to do right now. They're trying to get the Fed to cooperate and lower rates. And people ask, why would the Fed lower rates right now? Obviously, the job market continues to be resilient. Friday's non-farm payrolls, that's a mega data point for us to watch. We're watching the hard data at all times to see if the hard data weakens. We just got hard data, GDP, it's coming in strong. That's not, that we don't, people look and Powell's like, I'm not seeing the stag. And he's right? We continue to see growth. As far as the inflation, I'm watching oil tick up. It's above $70 a barrel. Are you all watching that? Hopefully, or not. I mean, hopefully for real. I don't want to see, and my expectations, I've been thinking about this yesterday with y'all. I was thinking about how you all know how after we had those most recent, a few months back, those higher inflationary upticks, I was like, that's likely the height of it, and now we're going to see, a period of lower disinflationary pressure take hold, and that happened. And now we're at right now. I'm watching closely, and if you ask me, like in the future, if the government is able to force the growth, and that's likely going to see like that's going to put pressure on inflation. And I'm not talking anything like 9.1 CPI, but I'm talking about higher than we are today, and maybe push on that 3%, 3.5%. I could foresee a place in the future, a year from now, 2 years from, like, if growth is taking place, where that's actually happening. And I'm watching closely what happens right now, and I see oil above 70. I don't like the direction it's heading. We have to keep an eye on that, and we're just going to keep, obviously, like no other, making sure that we have our pulse on the market and aware of all nuance. And even though there's expectations to be had, it doesn't matter. We will pivot in a second if presented with different data. And I hope that we're first, and I hope we stay on the right side. I know that we have a strong history of doing it, and I know we get better and better at it. All right. So, number one. Number two, if Bitcoin, what happens to Bitcoin if NASDAQ by the middle of September is trading lower than where it is today? And again, expectations are, even if it is trading lower, it's probably, we're not probably headed into an area of correction, but I'm worried, as you all know. I'm not worried. I'm making the observation of what's about to take place in August. I see the dollar breaking out. We could see, in a period that is unfavorable for seasonalities, further pressure. Let's pretend that the NASDAQ has a 10% correction, which is a legit correction. Obviously, 5 or 6%, that's probably an opportunity, and you probably see retail digging in. I do believe that. I believe retail will be digging in there, and 5, 6, okay, but a 10% correction, that's a big one. So let's keep those two numbers in mind. Let's take a look at Bitcoin. By the way, the gold here ahead of the Fed is that breakdown that we talked about. Perfect textbook retest, and now looking for the resumption. So this is the real deal we want to see, and we want to now see if this escalates, right? If after the breakdown, retest, resumption, this able to go ahead and fade this and get back above that, well, that's just as important. That's a strong signal. That's what you're watching for here to see if you are wrong. I don't know what silver's doing. Let me jump in over here, and and the week's not over, it's just beginning. Why I said we could even see wicks into this area. And if you did, I talked about, and I don't think that you should be going counter trend on gold and silver at all. I think you should look for any pullbacks as an opportunity to DCA in, to dollar cost average in for the long term. But obviously, we're looking at that being a very ugly pattern. Pullbacks are gifts. So let's go back over here. Let's look at what's going on with the Bitcoin and try to talk about what this would mean. All right. So let's go off of the premise that the Bitcoin would be able to keep on par. By the way, a lot of people looking at and saying, wow, Sailor yesterday, massive bid into Bitcoin. Looking at other companies out there, same day, making massive purchases. Bitcoin's off 1%, and they're like, oh, there's paper Bitcoin out there. Look, I was the first. I was so, like, of course, I'm always concerned about other scammy Sams out there, FTX selling Bitcoin they don't have. And do I think it's happening? Of course. Do I think it's happening from a major exchange? Likely not. I don't know about Coinbase, but likely not. And I don't think that, well, obviously MicroStrategy's purchases are not on exchange, it's OTC. It doesn't affect the immediate supply and demand on exchange Bitcoin. However, it does have a massive effect about going ahead and taking that supply from willing sellers at this level, people who are holding on to massive coin for a long time. And like what Sailor's doing is accelerating what will be known as the eventual supply shock. Right. And yeah, I do believe in a supply shock. And I do believe that as Bitcoin rises in price, there will be willing sellers and you'll see more supply. It could be you. And you might be looking at, you might have a number in your head 200,000 Bitcoin, I'm taking a piece off. 500,000 Bitcoin, I'm taking a piece off. And then obviously it's not just you, it's also there are a lot of let's call them OGs holding a lot of corn who, as that price rises, there'll be new levels of willing sellers, but Saylor is accelerating, going ahead and taking that coin and putting it into a place where he doesn't plan on selling it. So overall, it's just accelerating the timeline to the supply shock happening. It should not have an immediate effect on price when Saylor's out there buying corn. If you were to see the Nasdaq come off 5%, right? And from where we are today, I'm just doing it basically where we are today. I'm not looking off the high of Bitcoin. I'm just from where it is today, it came off another 5%. That would be, from my read and from your read, like that would be a breakout and a retest, and all is well and good and healthy. And then, hopefully it's able to maintain it. Now, this is an upward sloping curve. And the red line over here is what I put in to believe to be the best place to put that breakdown in. And I talked about how, well, it's very difficult. You could see the touches here below. Where exactly is it? I don't want to be late. I want to be early. But as this line over here, and this yellow line, just so you're knowing, you have resistance here. Yeah, what was resistance, now support here. These two touches over here, third touch over here, and then lower, right? It's all in those areas. And this seems to me to be kind of like the lowest place I could move it. So this is the red line, the yellow line, as this continues moving forward in time, because we're talking end of September, that's back down at 110,000 Bitcoin, right? 110,000 Bitcoin, 6%. Again, 5-6% on NASDAQ would be a buying opportunity, I think. On Bitcoin over here, it would probably be pretty close to nothing more than a breakout and a retest. And I'm just coming down now and I'm finding this area over here. And it's all variable. And I'm sorry, it's just not black and white. And it's all variable depending on time and price. So what happens if the NASDAQ corrects 10%? And then Bitcoin from where it is today corrects 10%, right? Back towards $105,000. Well, let's just say this. I hope it doesn't go lower. If it goes lower than that, and you could see that very important structural line that it's in, you could see that this is where May we found support off of the resistance in March, and then it was tested again in June. So if we break below that, then we have a problem. So my expectations are that between now and during this unfavorable time of year into the end of September, if we have anywhere between a 5 and 10% correction on Bitcoin, that's fine. Anything more, and it's not looking good. But that's what I don't expect, even with the drain on liquidity. And today's a mega day. It has nothing to do with Powell. It has everything to do with Meta. And I'm sorry, not Meta, with Microsoft. And let's see what Microsoft, Meta is like, Zuck is out there and like supercomputer. We're not far off from having super intelligence. I need to go ahead and I need to hire every possible talent I can and spend as much money as I can. And and he's just like that. But Microsoft, these guys take a different approach. And if they believe at any point in time that they could, look what they're doing. I don't want to go on the hot button. But if they lay off their capex spending, that's something that's not going to go over well with the markets. That's something that could then be perceived as an early sign of a bust coming on the whole AI narrative. I think it's a narrative for good reason. Obviously, it's a question of right now, how much resources can we get? How many chips can we get? How much energy can we get to run these data centers? And we just want as much compute as possible. You saw what Elon was able to do with X, with Grok, when he was able to go ahead in a heartbeat, put together a bunch of compute, get that up and running, and play catch up really quick. It's a race. It's not a race just for US tech, it's a global race. The US and the Chinese seem to be at the heart of this race. They're for sure the leaders. And if you are, if you are US based, you're obviously your competition are these other tech companies, unless you're Apple and you're just watching and waiting, watching and waiting, watching and waiting. Might not be a bad strategy after all. Apple's earnings tomorrow with MicroStrategies. What happens if MicroStrategy somehow here surprises on earnings and Wall Street all of a sudden realizes, wait, these Bitcoiners know exactly what they're doing. We had it all wrong. Could we see that lead somehow charge up over here? The next leg on Bitcoin could come up if we get if we see the equity markets defy seasonalities and Bitcoin make their leg up. That's also a testimony right now to the strength of this current market. And then you're going to get a lot of what are you going to get? A lot more of that feel good speculative behavior going on. You're going to get a lot more calls for watch out. We're about to go parabolic and we're about to enter the blow off of the 4-year cycle. That's something to watch out for. And because that could be one of the turns that's taken over here right now. And let's talk about that. There was one thing I left out in that last little rant, and I'm trying to figure out what that is. I didn't get a chance really to talk about the Fed cycle too much. Let me start over here. Let's talk about the next phase. Let me start off with this tweet I was running. I said right now the Fed is conducting quantitative tightening, albeit at a reduced pace, right? When they went ahead and they tapered quantitative easing, that was the beginning of what? Tightening. Even though and people were like, do you remember? This is who we're up against. Do you remember? People were like, you can't taper a Ponzi. Look, the next month they were tapering it. Taper means a lesser degree going forward until it finishes. And I'm like, that's the beginning of tightening, even though, and then the next month and the month after that, you see the Fed's balance sheet growing, and they're like, you see, they can't stop it. Anyway, um, as much as the beginning of tapering was tightening, when they taper the degree of QT, that's a further move towards easing. They're like it's a further move. So was that 50 base rate cut that Powell threw in there. And the question was, job market strong, economy strong, why are you cutting? And then people today are like, what's the reason then Powell would cut? Why would he want to cut? And oh, sorry. Lots of love, brother. Lots of love for sure. That's awesome. Um. Anyway, excuse my rant. It's all passion. It's all passion based, and it begets the fire. Thanks, Joseph, for saying that. And yeah, please do hit the like button, blow it up. It's free. You could just go ahead and bang it and hit it. Love it. All right. So let me continue here. All right. I'm setting something up. Oh, so why would Powell cut now? And that's what a lot of supporters say or to say. And I could be like, well, to get on the same page as the government who's trying their best to really spur on growth. Or you could say what Powell said. And Powell says, I would already be cutting if it weren't for the uncertainty of the tariffs. I'm an academic, so I'm not really good at being able to understand real world dynamics. It's all intellectual to me. And what the way I get it is that this is actually going to be inflationary. And so I need more time. Okay, you're the chairman. You get the time you want to figure it out, right? But he's saying, if it were not for that one factor, I would already be cutting. Why? If the economy is so strong, your supporters, Jerome, are saying that there's no reason to cut. You're doing everything right to not cut. but you're saying you would cut. So I want to hear more. I want to understand more. I want to know more. Um, so the Fed is conducting QT and keeping rates unusually high currently. We are still in the tightening phase of the cycle, albeit in we've made the turn out of it. We've made the turn where we've seen the tapering of QT and we've seen the first rate cut, but we're not into where QT stops. We're not into when the rate cuts come in, and we're not into when the balance sheet begins going upwards. And the last time we were in a similar situation was indeed in the summer of 2019. And in the summer of 2019, the Fed had just begun cutting. We're a similar place. Why we are in a similar place? Well, the Fed had began cutting. They cut 75 basis points during this period. QT was still running. And right now we have QT still running, and they did 150 base point cut, similar place. And then in September, obviously, you all know what happened. They had to abruptly stop QT and they had to begin running the balance sheet upwards. And risk responded very well. It actually began. The NASDAQ melted up. We saw S&P 500 up in months 14%. It was a legit melt up. Now, I don't know when they stop QT this time if it's abruptly balance sheet expansion begins, or they go to a period of pause for as long as possible. If they go to a period for pausing as long as possible, that's healthy. That's a really good sign. We want to see that happening. Don't forget the goal of the Fed is to go ahead and extend the cycle as long as possible. They're not in a hurry to debase, because it has massive ramifications, including people then waking up and realizing, wait a second, what are these people doing? They're completely destroying the middle class, right? So they're not in a race to do it. They'll do it whenever it's necessary, but they want to go ahead and extend the cycle out as long as possible. So what's really interesting about what I'm describing and where we are in cycle, there are a lot of people who believe that we are fastly approaching the window. The 4-year cycle window suggests somewhere between September and October. But then I say, well, seasonalities in November are so strong for Bitcoin. And then the end of the year is December. Let's give them extra time. Let's give them to the end of the year. But 4-year cycle behavior suggests that window, September between October. People think that Bitcoin is about to go parabolic, melt up, and get ready for the exit. And then we're moving into the 2026 bear. Most people also, the other part is people are now saying, okay, it's clear institutional adoption is playing a mega role, and this cycle looks like that it's going to be longer lasting than we've seen in the past. And then a lot of those people will say into 2026, because they still have the whole sprinkledness of the 4-year cycle and what those expectations are. And where I'm different is, well, we had the adoption push to the new all-time high prior to the halving. This was not supply demand dynamics. It wasn't the halving of the minor reward. In every past cycle after the halving, roughly 6 months, Bitcoin makes a new all-time high, and then it begins its parabolic run. And 6 months after the halving, Bitcoin makes a new all-time high and then begins its run. That didn't happen this time. The halving was adoption based. It was because of inflows into spot ETFs that Bitcoin, not because of the halving of the miners reward, but because of adoption inflows, that it made a new all-time high. And then roughly 6 months afterwards, we've yet to begin that run. And what I like to do is I like to have this little yellow line as an indication of when you're beginning that run up. And you can see that after that line is broken to the upside, the run up began. After that line is broken to the upside, the run up began. I don't know where to put it here. I think that's as authentic as I could get. And you have these pushes over here, and then even a retest. That's as authentic as I could get. And then you saw the sharp move up. So What about over here? Could we say that, well, it's all the way down here, and if we break this line, the run up begins? Maybe. I think that if we broke that line into the end of the year, which would be, let's, like, rough sketches. As we get closer, we'll get more really detailed. If we're trading above 140,000, my expectations are the calls for the top 4-year cycle are going to get louder and louder and louder. And then I could zoom out and I could go ahead and borrow this line over here. And is that would just be into the resistance? Is the top over there? I don't know, right? And I'm fine with not knowing always about anything because that's how I figure it out. But I am going to say that for me, the sustainable channel that we continue within, as long as that holds to the upside and downside, guess what? The move is sustainable. And if we break out to the upside, then I'm expecting one of two things happened. I'm expecting there was a major adoption event. The Bitcoin Act was passed. The US government, by law, is going to be buying X amount of Bitcoin per year for X amount of time. That sends off shockwaves throughout the financial system. Other countries have no choice but to begin an active stacking strategy. That sets up FOMO, except that sets up FOMO that actually has real dynamics behind it. That's likely just not speculation about people seeing Bitcoin run up and wanting to, like, I got red, I got what, they're like, that's real, and that's likely lasting. That's likely lasting um, for some time. And by some time, I mean for a lot longer than perceived. And what does that do to MicroStrategy if the U.S. government begins stacking? That puts them into what? A massive position of power, right? And as well as it's going to beget a frenzy. And outside of that happening, I don't know what's going to cause any type of FOMO as far as that Excel. Like, there's billions of dollars of Bitcoin that are being taken from one place and put into another, and where it's being put seems to be like going from strong hands who carried for a generation into new strong hands, right? And really, really, really important dynamics, healthy dynamics that continue to take place. Yeah. So Bitcoin, 4-year cycle, expectations. Let's continue the conversation. What I'm trying to lay out for you is what's going on with, first, the Fed cycle. And as far as the Fed cycle, they're still at an elevated portion where rates are currently high. They haven't stopped quantitative tightening. So we're not into easing, and people are looking for the cycle to be over, right? And okay, well, what about recession? We're headed into a recession, and that's going to put a stop in the cycle. Okay, well, the hard data is not the jobs data today strong, GDP data strong. The hard data is not showing any signs of that happening yet. That could change. If that changes, we're very aware of it, we're watching for it, and if we entered into an event driven recession, then that's something for, but that's not the probability of that happening now. If it's got to be, somewhere around, I don't know. This is like, this doesn't mean much, but it's under 20% and probably lower. But anyway, it could happen. And a lot of people continue to be worried about the tariffs. You think that someone thinks that the probability of a recession is higher? Could someone check Poly Markets and let me know what the probability of a recession in 2026 is? I would like to see it. I would like to know it. I put it at what, 18%? Go ahead, someone pull it up. And then what else is happening? What could cause a recession? I'm just not seeing it yet. Again, we are very focused though on looking and watching for when that hard data does break down. Historically, from where we were 2 weeks ago, it was within 40 days you see the breakdown of the hard. That puts us into the middle of August. We're getting close now to the beginning of August. It's not happening. So the average event-driven recession see that deterioration of the hard data, you know, roughly by the end of the summer. We're not seeing that happen right now. We have non-farm payrolls. That's a big one coming out tomorrow. But we just saw ADP employment coming in strong. We saw our advanced GDP coming in strong. We're not seeing that happen right now, but we watch for it because we do our best turn after turn to stay on the right side of the market. 14% in 2025. Year's almost over. Does anyone are we able to look into 2026? When? Depends on when, right? You guys know that a deflationary slow motion bust keeps me up at night. It does. That's something. If we saw what's happened in China over the last few years take place here, that's something. That would be bad news bears. That's not happening right now, though. We're not, you know, when I guess I was gonna say when Ray Dalio starts telling you to buy the U.S., watch out. But I say that with tongue in cheek. It's not happening right now. It could happen in the future. I had a conversation with Sonny yesterday. Hold on one second. So let me get into this, but let me go ahead. This is important. Oof, just close to 80,000 followers. If you're not following on Twitter, go ahead and do it. I'm looking for Sonny Side Up. There we go. So, boom, 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 boom. So many expect a bear market in 2026. Recession could be a cause, right? People and Bitcoin treasuries to blow up. He points to the Bank of International Settlements report on stablecoin redemptions and basically saying that that could be a catalyst here for a blow up. And it points to that a crypto leverage swell during the melt up. I don't see a melt up coming outside of a Bitcoin adoption event. I don't know what the BIS is looking at, but I do know that the BIS is the enemy. I know that they are the enemy, right? The Bank of International Settlements, the central banks of central banks is all anyone knows about them because that's all they could say because no one knows anything about them except for that we know that no jurisdiction in the world has any type of control over them. They could do whatever they want, and there's no one that could come in there and be like, you broke the law. There's no law for them to follow. These guys are legitimately the enemy of the people, and they're saying to us that stable coins are now a risk. And I'm saying, well, yeah, that's because they would prefer CBDCs. They don't want stable coins. They don't want the US dollar treasury market supported and have the possibility of the US dollar dominance being entrenched. No, they want control. And they're supporters of CBDCs actually backed by the IMF special drawing rights. Of course, they're going to put out a negative report about stable coins. But he says, Sonny's, I love the conversations and considered a friend here. I don't think it's a political statement. I think it's about inevitable redemptions. And, they talk about that in order for that to happen, they need to see a melt up. I don't I don't see a melt up anywhere in the cards. But again, 4-year cycle behavior, a lot of people are looking for that melt up to come. Sonny is looking for a lot to happen in the next few months, right? And we've had a great conversation together about because the only other person I know who was talking about how if we see the carry trade, the US dollar, Japanese yen break out to the upside, that could be something that and trying to get to it right now. We got a lot going on. It's right over here. So I'm seeing and I've been watching this because I'm telling you, if the US dollar breaks out against the Japanese yuan this way, that could contribute to further carry trade that's conducive to risk, right? And just like if it breaks down, that's that's bad, but it seems to be trying to break out the other way. And then I was thinking, you know, right now there's so much money involved in the Mexican peso carry trade. What's the risk there? And Sony's the only person I know who, without like first having that conversation, was thinking about it. But he believes that trade blows up within the next few months. When the Mexican peso carry trade unwinds in a few months, that probably causes one of the biggest credit contractions since the great financial crisis. I don't know when it blows up, right? I don't know that it blows up in the next few months, and I don't know that there's a melt up in the next few months either. And if you ask me, there's not going to be a melt up in the next few months. I guess that's a little bit of the differences, and I think it's important to explain. But I can't see the trigger for that. No prediction for 2026 as of yet. I can't see the trigger coming for any type of melt up outside of a Bitcoin adoption event. And a Bitcoin adoption event, like the Bitcoin Act being passed, that's like not likely not triggering a melt up, like a melt up parabolic run, boom. That's likely triggering a sustained the bull of all bulls begins running, and it's going to be running for quite a while, a multi-year run. Uh, I don't foresee that happening. I see sustainable channel continuing until that breaks. Again, the sustainable channel is now becoming apparent to a lot of people. A lot of people are like, wait, that's different. And it's different because the institutions are here and, and the corporates are here. And I was like, over here, the next phase of Bitcoin's adoption cycle is going to be the early majority. Since then, Wall Street is here. Inflows into the spot ETFs took Bitcoin to a new all-time high. That's different. That's not 4-year cycle behavior. And then on top of that, you now see people realizing, wait, this is different. And I'm saying yes. And it's not that everyone all of a sudden realized what's taken them so long to realize, but a lot of people are beginning to realize now. I go on to say by the summer of 2000 and the summer of 2026, it should be apparent to everyone the difference in nature of the cycle. But right now, elevated expectations for 4-year cycle behavior, for an area of a blow off top to come, and then a bear to come in the future. So I started off over here. I guess this is the next place to go. So this is a great, and JDK again. I don't care if you agree with me or not. I enjoy people like Sonny and JDK that I could talk about with them on Twitter differences of opinions and have discussions about it. It's not about like right or wrong, it's about trying to figure it out. And you know what? Always consult all different vantage points so you know when you need to go ahead and turn on a dime. But this would be more along the lines of normal 4-year cycle behavior. In a very recent video, we went ahead and we looked at what that particularly means. If you go back over here and you could look at, first of all, if you didn't see, do I think we've come too far too fast? Watch that video. But then we talked about, the Bitcoin cycle theory update. Is the 4-year cycle dead? Important one to watch. And then this one here, 12 days ago, signs Bitcoin is topping from a 4-year cycle perspective. And that gets into a lot of analysts' 4-year cycle behavior and why I've talked about the top coming or expected to come between September and October. We'll give it as far as November and December. By 2026, come on, you have to, at that point, you're going to have to give in. But a lot of expectations are in this area. And yeah, if Bitcoin is tagging $200,000 in the next couple of months, I don't think that's happening. But if that's happening outside of a Bitcoin adoption event, if that's happening, watch out. You could definitely see a lot of people looking for that 4-year cycle behavior. But here's what's different. And I'm going to go back over here now. There we go, to decode. And I like the way that decode illustrates here the business cycle. So you could see that this macro trend oscillator is his work in going ahead and having a visual for the business cycle, right? And the business, and we talked about what we talk about, like how PMIs have been, in contraction, now around 50. And some people were like, well, Raul says once the PMI goes above 50, that's alt season. And I showed you, no, it's actually when the PMI gets uber elevated, that that is the height of the business cycle. And at the height of the business cycle is when the most speculation is taking place, and it's when the easiest conditions are around. It's before the Fed begins tightening, and that is when you see the speculation going down the risk curve and into altcoins. But right over here, we're not even close into the expansion phase of the Bitcoin cycle, or the business cycle, or the macro cycle, or however you want to put it. And we're getting close to, it looks like, and by the way, there's nothing to suggest that, from my view, like, could something happen where we see a deterioration in the hard data and we enter into a recession? And if so, we never see the expansion into the expansionary phase, and we see what would be a lower low being made. And even though that, like, here you have a higher low, here you have a higher low, this could turn around and make a lower low. There's nothing that suggests that couldn't happen. That could happen. And I feel important to say a couple of other observations. Well, from most people's perspective, though, I say most from Decode's perspective, I should say, or from others like Tech Dev. Is it the Tech Dev? Yeah, Tech Dev. I was thinking of Tech Lead, the other guy on YouTube, the Tech Lead, former Google, former Alphabet. But Tech Dev, like, they believe that, well, we're headed into that expansion, and likely we're headed into that expansion of the business cycle. Again, I believe that they're trying right now to engineer growth. Don't fight the Fed. Well, also don't fight the Treasury, don't fight the government. And if the government is going ahead and they're doing their best to engineer growth, don't fight the government either. And that's the direction they're headed in. And you can see that it's not like as soon as you begin the business cycle into the expansionary phase that it ends. It's gonna have time to it. We haven't even gotten started. It's why I say the bull of all bulls hasn't even begin running yet. But you know what? I believe in really, like, checking all opinions. And you could see, obviously, Lynn here, nothing stops this train. And she's talking about why she believes that the next period we're entering into is going to be into a inflationary devaluation. That's mega growth. That's not recession. That's not slowing down, right? But I wanted to check in with Jurian. And Jurian Timmer is the head of global macro at Fidelity. And the reason I wanted to check in with him was because, well, Jurian, I feel like, is someone who's always trying to know where we are, where he believes he is. And he is not deterministic. He's looking at the data and he's trying to find out whether or not where we are in this secular bull, whether or not we have the opportunity to continue expanding to the upside, whether or not we're seeing earnings slow down and that's indicative of we're about to enter into a sub growth period. He just wants to know where we are, and he looks at it objectively, not subjectively, to the best of his ability. So I just went to his page, and the first thing that's pinned here, it says, I guess from yesterday, the global bull market continued last week with new all-time highs being recorded on a daily basis, with trade deals in place. Right? Powell's worried about what was going to happen. He's got some resolution with the big EU trade deal with Japan and now the EU. It appears that the tariff tantrum has crested. The major market overhang and worry, from Jurian's perspective, is that's now crested. It's not over, but the worst is over. April, that was the dip. That was the opportunity, and nothing easy about it. I'm just saying here from where we are today, having corrected 30%, it's very rare to get a double dip 20% plus correction. Actually, it's never happened in the past 100 years. So it's very rare. Anything could happen. It's the markets. But if that's what you're looking for, you might be a little offsides. You know, it's not what the data suggests. And he's saying that, you know, Powell's biggest worry is coming to an end. That's crested. Just as the fiscal impulse from the big, beautiful bill is getting started, and that's what I've been trying to point your direction to. The government's looking to engineer growth. They just went ahead and the big beautiful bill has all of the tax cuts that are front run, right? In the next few years, you're gonna get the biggest benefit from them. Later on, bad news bears. That's not good. That's not good stuff at all. But the government and the growth they're trying to engineer, that's just getting started. Again, this is someone who tries to look both ways. So I'm not looking for people confirming my opinion. I just showed you people that were not. I just looked at my friend JDK, Sani, and they have different views. That's fine. I'm just trying to figure it all out. And then the second tweet after it, I didn't really get into, but he points to this is the important part here. We're into earnings. This is a very important piece of the puzzle, obviously. In the past, I've seen Jurian look at and point to, or I don't know if it's from him. One of my most important takeaways is when you see earnings like moving in an uptrend, it's extremely bullish. When you see them starting to come off continuously, that's very bad. He's pointing to the recovery in earnings, I think. Let's go ahead and take a look at the recovery in earnings estimates is in par with the improvements of GDP forecasts following the growth scare in April. The tariff tantrum is crested. The incoming fiscal impulse from the big beautiful bill is being priced in. The improvements have begun, been attested by valuations. Earnings and valuations are going up. When earnings are going up, when GDP is 3%, job market stable, these are not signs of a recession. These are signs of the mega trend in place continuing. When I talk about mega trend, I'm talking about coming off of 2 years of 20% back-to-back growth and then continuing here on the highest, most outside deviation. Look, everything that I see points to me that yes, just like Lynn says, this time is different. What are you talking about? When deciding if this time is different or not, it's important to have the right baseline to compare. The fiscal dominance we're in is indeed different than the monetary dominance that we've been in or you're used to, because in our lives, that's what's been the focus. But it's not different from the last time that we were in a period of fiscal dominance. And she's pointing out, yes, this time is different than what you're used to. And I'm telling you, this time is different than what you're used to. And the macro here, it supports where Bitcoin is during its adoption phase. There's every reason to believe that this time is different, that there's no reason to expect that the 4-year cycle is about to come to an end because it's broken. I guess what I wanted to get into you, which I'm not able to now because I think it's a pretty banger session, was talking here about expectations for global liquidity. If you look here on this chart, first of all, I can make the observation that two observations I'll make with you. The expectations are the red line, what he calls the 65-month wave, and then in black is, I don't know what that is, GLI. If anyone knows, let me know. I'm just going to say where we are currently. And you could say that up until, or for the last, since 1965, however this data is presented, you've never peaked in actuality after where the expected 65-month wave peaks. except until now, because if you see where that red line peaks over there, it's in the first half of 2025, and we're now beginning the second half of 2025. So this would be the first time that you're seeing that's different. It's not the same. But here's the thing. A lot of these speculative theories are based on, and specifically since 2008, right, is the amount of debt that needs to be rolled over, and on the cycle that it's being rolled over on. And I'm like, well, something has changed in so much as that in the last few years, Janet Yellen has begun rolling over a lot of that debt to short-term duration. And that potentially could be signaling why we're seeing the change here in the global liquidity cycle. Now, that's just my original thought. I'm going to go ahead and spend some time researching that and seeing what type of conclusions I could come to. Tomorrow will be great. We'll pick up on that. We'll talk about that further. Absolutely beautiful. CTM. Powell's turn. 25 minutes. Fed decision. Do you get a surprise cut? And then obviously 30 minutes after that, Powell does what he does best, walk that fine line. Let's see what the markets have to say. I am more interested personally, and I'm kind of excited today to hear. Like, it's kind of like, if you watch some type of like drama or a series or something, and I feel like, well, today's the next episode. See what Powell says. But I'm most interested in the earnings today after the bell. I want to see what MicroStrategy and Meta, how they play into what's happening. I'll just leave it at that. I'm sorry I didn't cover our positionings. Just go to the CTM dashboard, obviously. But NVIDIA here, continuing to hold and run, 25% into profit. Tesla just took a new position, close to being stopped out. FNGU continues to hold. Again, the earnings are really going to have a dramatic effect, I think, on what happens with this position. TQQQ continues to hold and run. And then what an incredible get on the sidelines for MicroStrategy. Earnings on Thursday. That's a big one for us to watch. Spot ETFs hold 7% into profit. Ethereum continues to run into profit, 47%. Cardano holding on, 10%. Bitcoin bull runs holding on here, 18% as well. Everyone, have a beautiful day. God bless you. If you didn't hit the like button, please go ahead, hit it on the way out. Share the video with a friend. I'll see you all tomorrow. Have a beautiful day, everyone.